Hello, and welcome to this week's tax update. I'm your host, Andy Rainford, Chartered Tax Advisor and Editor at Tax Essentials for Advisors. It's been a quiet few weeks on the news front. That's not surprising given that the budget is just around the corner. Indeed, our general news section is largely concerned with the perennial rumours that have survived into November. I'll also tell you about some helpful information available if you're getting clients ready for making tax digital. Finally, two interesting cases, including one involving dog handlers and the agency rules. So, budget rumours. First up is a potential pay-per-mile charge for electric vehicles. I've seen various iterations of what this might look like. With the most popular indicating a charge of 3 pence per mile, I've felt that this would be inevitable for some time. Successive governments have pushed pro-EV narratives for years. Employers and employees also have an incentive to opt for EVs when choosing company cars due to the lower benefit in-kind charges. The gradual shift means less revenue from fuel duty and the carbon emissions-based vehicle excise duty, so I think this rumour may well have merit. Another credible bit of fruit from this grapevine is the potential curbing of the NI breaks for pension schemes, where the employer operates a salary sacrifice arrangement. Instead of contributions being deducted from earnings, the relevant amount is forgone altogether and paid into the scheme. Currently, this is not treated as earnings and is outside the scope of the optional remuneration arrangement rules, so no primary or secondary NI is due. This may be restricted to the first £2,000 of payments if rumours are to be believed. It's also possible that individual savings account investment limits will be cut. The current £20,000 limit has been in place since 2017. On a more positive note, the latest gossip on a potential income tax rate increase, possibly coupled with a cut in national insurance, is that it has apparently been shelved. Some employers pay staff early in December. There are several reasons they may do so. However, it is important that the payment date recorded in the full payment submission is the contractual date, not the actual date. Using the actual date could adversely affect employees that are in receipt of universal credit, so pass this information on to your employer clients in good time. His Majesty's Revenue and Customs is ramping up support ahead of the Making Tax Digital for Income Tax rollout. A number of webinars are ongoing, with various aspects of the reform covered. The next two live events are shown here. You can get more information, sign up, and also view historic webinars on a wide range of topics by visiting this link. This first case looks at when a valid notice for appealing a decision to the tribunal is made. The company received a customs duty demand. It requested an internal review, which concluded on the 17th of January 2025. Appeals to the tribunal must be made within 30 days of a decision. The company filed the notification form via email on the 14th of February. How romantic. Unfortunately, due to a technical problem, the text from the HMRC decision could not be pasted into the relevant box. The form was returned saying that it could not be processed without the missing document. This was successfully filed on the 6th of March 2025, which was then 17 days past the 30-day cut-off. HMRC said this meant the appeal was out of time, but the tribunal said that all of the legally required information was received on the 14th February, but there had been a defect which was resolved later. This did not mean that the notice was invalid. The appeal had been made in time. Finally, was a company that provided search dog services acting as an agency. The company provided clients with dog handlers, which it argued were self-employed subcontractors. The handlers owned the dogs and were responsible for their welfare. However, HMRC said that the degree of control the company exercised meant that they were really workers under an agency arrangement. The tribunal agreed, meaning that the company is liable to operate PAYE on the payments made to the handlers. That wraps things up for another tax update. The next one will be slightly later than usual, owing to my latest globe-trotting adventure and the timing of the budget. Hopefully there will be plenty to talk about when I get back. Bye for now.
Thanks, Andy. I hope you have a nice, relaxed holiday. Not jealous at all. Please do visit our webshop to view our full range of solutions, from our in-depth commentary and guidance to our advice-led newsletters and media content. Stay tuned for a short video introducing our dedicated AI tax tool.